Everybody knows 2020 has been very adventurous, to say the least, so far, with the stock market having the fastest drop in U.S. history. From the start of 2020 until March 20th, we saw over a 30% drop in the stock market that could even been deeper if they had not activated the circuit breakers on Wall Street. So, ladies and gentlemen, during this time, I seen something that not only gone up 10%, but also paid a monthly dividend. Today, in this episode, we're going to talk about exactly what that is, what is it, how is it invested, and all other great stuff. But first, hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your host, the Prince of Investing, Prince Dykes, coming to you guys and girls live from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, in my portfolio, if this is not your first time hearing of this, I've always I won't say I've always recommended it, but I always talked about it. What will you keep, where would you keep your cash? Where would you keep your cash as the market started to fall? As the market fell, where are you going to keep your cash? A lot of people say, "Hey, I want to keep my cash on." A lot of people say, "I want to keep my cash, sitting in cash." But guess what? As you're waiting on the stock market to fall and crash and whatnot, let's say if it takes a month, 2 months, 3 months, a year, 2 years, 3 years. Some people have been waiting for 2015 for the market to crash. Now you have to worry about opportunity costs. That puts you at an interest rate risk, right? Why is that? Not an interest rate. I mean an inflation risk, because as you know, everybody knows inflation is going up 3% a year. If inflation is running up 3% every year, right, and you are keeping the same stocks, what's going to happen to you, right? If inflation is going up at 3% every year, your money's staying in cash, only earning what 0.1, whatever your savings account is earning. Guess what? You're losing every year because you have an inflation risk because your money is in cash. So I always research where other places I can put money where it can be relatively safe, but I still have the liquidity, meaning I can turn it into cash and invest it very fast. And ladies and gentlemen, today we're going to go into this particular ETF. And this is the ETF, what it does. It's a long-term bond ETF, right? You look at the report here. It's pretty much very low expense ratio, 0.6%, 0.06. So very low expense ratio is what I liked. It also pays monthly dividends, and it doesn't move as far as the market does. Let me show you exactly what I mean. So right here you can tell 14%, the top holdings of this is usually in the US Treasury bonds, right? Long-term U.S. Treasury bonds is what it's mostly invested in. They consider U.S. well, not they, but it is considered in finances that U.S. Treasury bonds are risk-free. They are the lowest risk thing on the market that you can invest in because the United States has the highest credit rating and they can pay back their money if they needed to. The most, they got the highest credit rating. So when you invest in the U.S. Treasury bonds, they're very low risk. Now, ladies and gentlemen, the stock symbol, drum roll please, is BLV, Bravo Lima Victor. Vanguard Long Term Bond ETF. There are other ones out there, but this one I don't mind having because when you buy it, there's no expense. There's no transaction fee for buying and selling it. Also, you can look at the gross expenses point zero six or 0.05, right? Very low expense. Also, it's almost right there with the regular ETF, right? A passive ETF. It pays 3% a year in dividends that are paid out monthly. So if you own one share, you collecting 27 cents every month, bringing you up to a 3% yield a year. So 3%, I'm keeping up with inflation, right? Because I'm getting a dividend every month, and also it has gained in value. So not only did it pay a monthly dividend, it also gained in value. Let's take a look at the chart. So right here, when you look at the chart, right here, at the top line that you see, if you're seeing this, if you're listening to it, I'll walk you through it. The blue line is the S&P 500. So the year started out, this thing was $100. It peaked all the way at $117. It gained 17% in 3 months. Then, of course, the coronavirus hit the market. It dropped all the way down to $92, meaning it only dropped off 8% from where it started out at the year. Not a massive drop, right? Now, when you look at how it rebounded. Now, when you look at what the stock market was doing, the stock market dropped 30%. This dropped 8%, right? From its where it started at the beginning of the year. Now you fast forward to now, you're seeing that this is up 10%, and the stock market is still down. S&P 500 is still down a -%. So in this whole time, it paid a dividend. It collected a monthly dividend. Now I held it. I held it for a while, but I started to liquidate it as the market started to collapse, and I started to buy more stocks. So while the stock market was crashing, I was selling this and buying more equity. So this is what I want to look at and bring up to you guys and girls, because everybody's looking at their portfolio. They're trying to find the next hot stock and the next hot this. Some people are scared to invest in the market. They say, hey, I think we're overinflated. I think da da da. I don't know what's going on. And they're just sitting their money in cash and just waiting for the next opportunity. This is something to consider. If you're on the conservative side, you still want the liquidity and you want to collect the dividend. So a long-term bond ETF, you can see it's mostly little to no risk due to its investment strategy. And to look up, people ask me, hey, how do you find the investment strategy? You got to look up the perspectives. Perspectives. I hope I'm saying that right. So right here, go to prospectus. Boom. And right here, the prospectus will break down everything you want to know. It will give you the annual report. It will tell you who owns it. It will tell you what they invest in. Everything you want to know about an ETF, you have to look up the prospectus, right? You don't get a lot of information, but if you look up in the prospectus, you will find a lot of what is invested, how is it invested, who owns the fund, who's the fund manager, how much money is in the fund, when does it pay dividends, its risk factors, all that other great stuff. But, ladies and gentlemen, I wanted to bring this up to you guys and girls of another investment strategy, not a strategy, but an option if you're scared and you have your money sitting on the sideline because of what the market is doing. BLV, Bravo Limo Victor, is a Vanguard long-term bond ETF. There are plenty of long-term bond ETFs, but I like to look at the one with a very low expense ratio, and I like to look at what it's invested in, right? And this one pays a monthly dividend too. So that's something I want to leave you guys and girls. Don't forget to like, subscribe, comment, and share button. And until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace. Be safe. I'm out. Thank you.